Palau has had the same business tax system since the end of World War II. What worked under the trust territory doesn't serve Palau or Palauans today. The current gross revenue tax, GRT system, is set up to benefit only a select few, not our entire community. So it's not fair or equitable. This is why our government is proposing to modernize Palau's taxation system, to take it out of the last century and simplify it, so that it better meets the needs of the Republic. This new system is proposed to start in 2023 and will set our economy up for a prosperous, thriving future in the 21st century and beyond. The tax reform will take us from an outdated GRT system to a Palau Goods and Services Tax, the PGST. PGST is not a new taxation method. It's a global standard successfully used by over 160 countries worldwide. Here's an example of why GRT doesn't work for Palau today. Under the current system, foreign tour agencies who sell tours to Palau can keep their profits offshore and not pay any tax in Palau. So these foreign-owned tour companies are making money from selling Palau's pristine paradise environment and culture, but Palauans aren't benefiting from it. And because many of these foreign businesses own the entire visitor journey in Palau, from transport and hotels to restaurants, tours and gift shops, too little of the revenue generated by these visitors stays in Palau. Under the new tax system, more tourism dollars will stay in Palau. Here's how it works. PGST is a process of indirect taxation on the sale of goods and services. This is collected in stages through the chain of supply, or at every point in a transaction chain of a single good or service sold. Businesses simply charge PGST on their sales. This is called output tax, and receive PGST on their purchases and expenses. This is called input tax. Then they settle the difference with the Palau's tax authorities. The government's proposed standard rate of PGST on goods and services is 10%. This rate has been analyzed to bring Palau the same revenue we're currently collecting. It is not intended to collect more revenue. Here's an example of a 10% PGST. We start on the left with the lumber importer. He imports lumber and brings it to the wholesaler, where he sells it for $10 and charges PGST of $1, making a total of $11. The wholesaler then sells to the retailer at $20 and charges PGST of $2. That's a total of $22. The retailer then sells the lumber to consumers for $30 with PGST of $3. That's $33. When filing his taxes to the government, the construction company will take out or deduct the $2 tax he added from the $3 he collected from the homeowner or consumer. Value gets added along the way as each business adds specific expertise and skills to the product, and each business sells the goods at a higher price than they purchased them for. By 2023, when the new PGST system would take effect, the bulk of taxation revenue would come from Palau's 100,000 plus annual tourism consumers. Here's how the collection by the government works. The lumber importer charged $1 PGST to the wholesaler, so pays $1 to the government in the monthly tax filing. The wholesaler has charged $2 of output PGST and paid input tax of $1, so they pay $1 PGST to the government and they get $1 back as a deduction in their monthly tax filing. The retailer has charged $3 of output PGST and paid $2 of input PGST, so they would pay $1 to the government and they get $2 back as a deduction in their monthly tax filing. This way, the goods and services tax is charged along the way. In this example, the total paid to the government is $3. That's 10% on each stage of the supply chain. And as you can see, PGST is embedded in the final price the consumer pays. A consumer pays taxes only on the added value at the final point of sale, unlike the GRT system, where taxes are added up from import to the final point of sale. This is what makes it fair for us, the consumers, who are bearing the extra tax burden under the GRT tax system today. Under the current GRT system, household basics like deodorant are taxed at 25%. The flat rate of 10% will make this go away. And the new tax system aims to be revenue neutral. That is to say that tax revenue only grows when the economy is doing well. More profits, more tax revenue, and is reduced when the economy slows. Less profits, smaller tax revenue. The new system is better for Palauan businesses. If the business makes a profit, it will only pay tax on that profit and not on gross revenue. It is also fair and equitable for all. By introducing Palau Goods and Services tax reform and modernizing our tax system to serve us, not others, we will build a prosperous Palau today and protect our children's economic future tomorrow.